Good evening, good evening, good evening. Good evening. Geez, sorry folks. I'm still running around trying to get everything done and dusted. Today has been an extremely busy day. And I actually cannot wait to come and sit down and just have a relaxing chat with all of you for about an hour. So let's see. There we go. Oh, look how beautiful it is outside. We're having a bit of rain, so lekker. There we go. Now I can even see who is joining us tonight. Good evening, good evening. Estelle Way and Joey and Jason and so on and so on and so on. Good evening, everybody. Wow, did you see that strike of lightning? Goodness gracious. Jason and Dean and everybody, good evening, good evening. For those of you that are new to the live event, it is Q&A like Joey has just done. For those that are with us on another Thursday night, let's see. Joey Bocello, which broker would you suggest for an RA? I'm the broker, Joey. As easy as that. You want to speak to somebody to do an RA, you speak to me. And if you don't want to deal with me, I've got 11 other advisors in my company. You're welcome to contact me and I will put you in contact with one of them. I've got one guy that really specializes in pension funds and provident funds and stuff. He's really good with that. I've got one or two guys that really specializes in risk business, so they do very well when it comes to life cover and that type of thing. And then I've got a number of guys that specializes in investments. So all you have to do is contact me and we can set you up with myself or somebody else to do a retirement annuity for you. Okay, so let me just see. Have I skipped anybody? Doesn't look like it. Whoops, now I escaped somebody. Which broker? Okay, so yes, okay, Joey. So, do you have my contact number? Do you have my WhatsApp number? It's in my profile, so you can just go to my profile and you can go and contact me there. But I see I've been getting this question a lot, so let's pretend that you've asked. The WhatsApp number you can contact me on is 060-541-4685. And then you send me a WhatsApp and I'll get the ball rolling. I'll just repeat it quickly. 060-541-4685. Okay, Joey, looking forward to hearing from you, sir. Jason, are you also a financial advisor? You telling Joey to get in contact with you? Good stuff, brother. Good stuff. Martha and Ozzy and Wessel Beneke and Terrence and lots of people that I have. One or two people I've seen from before, one or two people, but there's a few that I don't know yet. Mason says how much? How much what, Mason? How much do you need to start to invest? How much is a consultation? How much life cover you need? Lots of how muches. If you're not more specific, can't really answer you. Lance says, what is your advice for investing for your kids' future? Is it tax-free savings the best way to go? So, Lance, the question is a kind of a yes-no answer, okay? And, excuse me, the reason why I say it's kind of a yes-no answer is any investment such as a unit trust or a life investment, which is an endowment, or a tax-free savings account or tax-free investment that you do, any of those, you as the parent to take it out, you are in control of that investment until the child reaches the age of 18. Once that child reaches the age of 18, that child is now, what they call it, legal. You're old enough to handle your own finances. That child then has the authority to go and say, listen, yeah, I want to do with this investment as I please. So any of those investments can be a really great investment for your child But I think more important is when it comes to investment for kids is that you educate your children so that they have the financial discipline not to waste the money. That is number one. Secondly, if we look at it from this point of view, a tax-free investment will most probably be the best for a child if you're going to educate them, for the plain and simple reason. If you start investing when a child is just born or maybe very young, you will be filling that investment within a 14-year period with the 500,000 Rand that can be invested. So that child will have a guaranteed investment of 500,000 Rand plus growth by the time they get to the age of 18 that you started for them. Now, if you wish to invest for that period of time and longer, so you don't just want to invest until your child gets to the age of 15, 16, 17, 18, then you're going to start with a tax-free investment. And then once that's filled up, then you will start with an endowment for them. And then the other thing that is a very, very good investment, which we have not mentioned now, is a retirement annuity. So if you are one of those people that says, listen, yeah, I want to leave that long-term legacy. I don't just want to give them money in their early 20s or in the late teens or something like that. And I don't want to see them wasted. I want to make provision for the absolute longevity. Then you can give them a retirement annuity. Now, if you give a child a retirement annuity, okay, and you contribute up until the age of 18 or 21, and then stop that retirement annuity, if you've contributed a reasonable amount, and when I say a reasonable amount, you start with a 500 or 1,000 Rand investment that increases annually by, say, 10%, and you do it until the age of 21, chances are very good that if your child is going to go into the normal job market and earn an average income, that retirement annuity already will be sufficient to provide a retirement income for their child, that they never have to do their own contributions. So there's a number of these things, and I think it's the same that I always say. It depends on what your end goal is for your children. If your end goal is this lifelong legacy, retirement annuity. If your goal is just to make provision until they get to the age of 18 or 21, then most probably an endowment or a tax-free investment. I think the tax-free investment is great if the child is also going to leave the money there until they are 40, 45, 50. Because tax-free investments is only as good as the term that it's invested for. You need a really long term of investment on a tax-free investment to really get the benefit of that tax-free growth. Okay, so Lance, that was a bit of a long answer, but it was a good question. Z2, so I answered your question as well because you had the same question as Lance. Great stuff. So let's just run back here. I must have missed one or two questions, I know. Okay, there we go. Let's see. John Wick, opinion on Easy Equity property investing platform. So John Wick, I actually answered, or I sent you a message today because you sent me a direct message. Okay, so my opinion on Easy Equities property investing platform. So you must understand that I am not very knowledgeable about Easy Equities because I don't make use of Easy Equities. Easy Equities is a platform. It is a website where you are allowed to go and invest into shares, unit trusts, different investments, and you do it in your personal capacity. There's nobody that advises you. You have 1,000 Rand or 10,000 Rand or 100,000 Rand. You say, listen, I want to invest this money. There's nobody that tells you, listen, invest it here, there, anyway. There's no financial advisor. You are solely reliant on your own discretion, your own opinions. Okay, so that's what you have to understand about Easy Equities. So when it comes to their property investment platform, I honestly don't know what properties they have in that platform. I don't know what the portfolios look like. So I cannot really give you an answer. But what I can tell you from my knowledge and experience on property portfolios, I am not the biggest property fan. I'm definitely not a big property fan when it comes to people wanting to buy townhouses or houses and rent it out. I'm definitely not a fan of that. When it comes to actually investing in property portfolios, there's 20 other portfolios I'll choose before I choose a property portfolio. So I can't tell you in terms of easy equities. But this is the thing. If you, as the investor that has the money that you want to invest, if you feel confident that the platform is the right platform, that the portfolio is doing well, you've done your own due diligence, you feel comfortable to invest there, you feel that it's a good place, then go for it. I always say it doesn't matter where you invest as long as you invest. Because if you invest in, even if you only get 7% return on your investment, you are still better off 10, 15, 20, 30 years from now than the guy that's not investing anything. Obviously, don't invest in a Ponzi scheme or pyramid scheme. That's, but yeah. Always do your due diligence. That's what it comes down to. Always make sure you do your due diligence and make sure that you are comfortable that the investment that you will be investing in is not a fly-by-night or a Ponzi scheme or something like that. Okay, Joe Bocello says, I fail to understand some concepts here. It has to do with shared many in one portfolio. I fail to understand some concept here. It has to do with shared many in one portfolio. Joey Bocello, I'm not 100% sure that I understand what you mean. Shared many in one portfolio. I'm a bit lost at what you are talking about here. Many in one portfolio. Sorry, Joey. And listen, I do understand. I do understand that putting a question in here, you limited to 50 characters or something like that. But Joey, you're welcome to put in another question and another. Trust me, I'll go back and I'll check them. I will figure out what you're trying to ask me, okay? But I'm not completely with you at the moment. Mason says, can I put a savings for 5 years? Can I put a savings for 5 years? How much interest will I get? Say 300 Rand monthly. Oh, Mason, my brother from another mother. Mason, mate, if I knew how much you were going to get for investing 300 Rand a month for 5 years, and I could tell you now, spot on, this is what you're going to get, I will not be sitting here doing these things tonight, because I would be a multi-millionaire, because there will be millions of people that want to invest money with me because I have that foresight. I would be a multi-millionaire, but we don't have that foresight. So I can't tell you what you will have. What I can tell you is the following. If you start investing 300 Rand per month today, okay, you can get a return on your investment of anything between 5% to, I would say, 14, 15, 16, 18%. But the concept that people don't quite understand is, if your first 300 Rand is invested for the full 5 years and you get 15% return on it, you get 15% on that first 300 Rand. The next 300 Rand that you put in, you get 15% on that for 4 years and 11 months. So you get a little bit less than what the first premium is. And so it keeps on going. And now we know that the interest or the growth is not going to be the same on a month-to-month basis. So what happens very often is people invest money and they say, okay, I've invested 3,600 Rand per year in your case now. So I've invested 17,000 Rand, and then they get 22,000 Rand, and they say, I never got my 10% because on 17,000 Rand, I should have had, I don't know what. I should have had 30,000 Rand. But it's because of that fact that you only get 15% on the first premium, then 15% the next premium, but for 4 years and 11 months, etc., etc. So what I'm trying to say to you is I cannot give you a guarantee. I can give you an estimate. The other thing as well is some people will only get 5% because they make use of money market accounts or bank savings accounts. Other people will get 12, 13, 14% because they invest in very aggressive funds, so they go into equity funds. So Mason, as much as I would love to give you a straightforward answer, I can't. The important thing is that I want to say to you is just start investing that 300 Rand a month. I really don't care, mate. Even if you just put it in the bank, just start investing it. You will smile. Okay, let's see where we are. Oh, tonight TikTok is nice with me. It doesn't jump all over the place. I hope it keeps like this. Lance says, but with an ARA, is it only accessible at age 65? Lance, no. Your retirement annuity is accessible at the age of 55. So in South Africa, legislation says that we can retire from the age of 55 and any age thereafter. So if you have a retirement annuity, it does not matter until what age you've taken it out. You can retire from it at the age of 55 or any age thereafter. That's how it works with a retirement annuity. And obviously, the longer you invest, the more your capital will be worth, and the more you will get as a return on investment, meaning that you will get a bigger income in retirement. But yeah, no, retirement annuity from the age of 55 anytime. Hey, wait, hang on a second. I need to see that again. Hey, there's something happening with GPF today. The guy is in distress. Oh. So I suppose what you're saying is that the guy that I couldn't understand the question earlier is in distress because of something happening with the GPF today. Folks, I don't know what's happening with the GPF today specifically. Can't tell you. I'm not that figure on the pulse, but I will find out most probably in the next few days, week or month. If I don't find out, my good friend Mr. Rowan Carolus, which is absolutely on top of GPF stuff, he'll be able to tell me. I won't be surprised if he's actually in the call, and I just haven't seen him yet. But yeah, I can't tell you what happened today on the GPF. Whatever it is, can't be too big a problem. Trust me, it can't be too major. Because it's just like one of those things. Changes in portfolios, changes in investments, changes on GPF, changes on any of these things, okay? On any of this stuff. If it's small changes, we don't hear about it, and it comes and it goes. But if there's a big change, if there's a major change, trust me, we would have known about it. I haven't heard of anything, so I'm sure it can't be anything. I know that they've changed the formula a little bit in terms of how they do calculations, but over and above that, it's about all I know. Dory Geldners, can you please tell me about a hybrid annuity? Dory, thank you very much for that question. Yes, I'd love to tell you about a hybrid annuity. So, when it comes to retirement, when you go into retirement, you know that you have to purchase an annuity to give you an income with your 2/3, okay, or with your full pension. You get an option to either buy a living annuity or a guaranteed annuity. So just a quick one, guaranteed annuity is where you choose a guaranteed term, a guaranteed income, a guaranteed increase in income, all the guarantees. Living annuity is where you say, I'm going to draw 5% as an income. You put it into portfolios. You hope to get a 10% growth on your investment or more so that your capital keeps on growing and that your capital never runs out. So those are the two options in terms of annuities. Now, when it comes to a hybrid annuity, all it basically means is that you as the individual says, okay, I want a portion of my funds to be invested in a guaranteed annuity, and I want a portion of my funds to go into a living annuity. And it doesn't matter what the split is. You can have a 10-90, 50-50, 40-60, 30-70, it doesn't matter. But that is what the hybrid annuity is. It's just a combination of both of these products running side by side because you feel that it's going to work better for you, or you've been advised that it's going to work better for you. And there's lots of reasons to do such a hybrid annuity. There's also lots of reasons not to do it. And it all comes down at the end of the day to two things. How much capital do I have? Is number one. And number two, what's my personal circumstances? So once those two has been established, then one can determine, is it going to be the guaranteed annuity? Is it going to be the living annuity? Or is it going to be this combination? Okay, Dory, I hope that answered it for you. So Wayne says, what would you say is the current best tax-free investment vehicle in SA? Wayne, once again, I would love to say, listen, yeah, it was company A, but then company B, C, D, and E is going to be very unhappy with me. Okay. So the one thing I'm willing to say is it's definitely not a bank. If you put your money into a tax-free savings account in a bank, you are wasting your money. That is my absolute honest opinion. So don't put it into a bank savings account. That's a waste of money. But what I do believe is that if you have a long period of time to do a tax-free investment, you go to one of the recognized investment companies, Old Mutual, Sanlam, Momentum, Liberty, Allan Gray, 91, Marriott, you call them, and you invest in an equity fund. So you look for a full-on equity fund where you either invest 100% in local equities, 100% in global equities, or even a combination. That, I believe, is your best tax-free investment. Because remember, at the end of the day, it is not the product that you take. It's not the investment or the tax-free plan you take with the company that you take it with that gives you the good returns or that guarantees you that you have taken the best investment. It is the portfolio, the unit trust, the fund within that investment. That is what determines how good or how bad your tax-free investment is. So I hope that answers it for you, Sir Wayne. Donnie van Heeren says, Wayne, Sanlam tax-free. Ag, Donnie, maar hy se wees die chom. Is jy financial advisor vir Sanlam, nou promote jy hulle. Wayne, ek gaan nie met jou stry nie, Sanlam is goed. Of hulle die beste plan het, weet ek nie. Klomp Afrikaanse boertjies daai nog, man. Mason said, what's the best interest rate? So, Mason, just back to what I answered on the previous person. If we're talking about interest rates, you have to go and Google banks. You have to go and check which bank gives you the best interest rate. And I can promise you now, although I don't know a lot about savings accounts and fixed deposits with banks, if you go and search 12-month fixed deposit, best interest rate, and then 24 months fixed deposit, best interest rate, and 36-month fixed deposit, best interest rate, I bet you that if you really go and do a comparison on those different time periods, you're going to find different banks being better. So Bank A might be better on the 12-month, but Bank B might be better on the 24-month, Bank C might be better on the 60-month. I bet you that's what you're going to get. So when you want to look at best interest rates, you have to go and compare the different banks' interest rates of their different products with each other. Because I have also seen that banks sometimes have 2 or 3 different savings accounts, and the one savings account just has a better interest rate than the other one. I can't explain it to you. It's one of those intricacies. It's like wanting to go and buy a car. I don't know when was the last time you guys wanted to look at a new car. You go and Google any new car, Toyota Corolla 1600, and you go and look at how many variations there is of Toyota Corolla 1600. Because you get one with aircon, and you get one with aircon and AI that speaks to you, and somebody that almost one that almost drives the car, etc. But they're all Toyota Corolla 1600. Now, the same thing happens with regards to products like this. So, in terms of best interest rates, cannot tell you. In terms of best growth rates, even more difficult, because company A's balance fund could be the best for this year. And next year, company B has got the best balance fund. There's an award they issue every year. They call it the Raging Bull Awards. And every year you could go and check in the different categories. This year it's Old Mutual. Next year it's Marriott. Next year it's Sanlam. They keep on competing and winning this award. It's never the same every year. The important thing with investments is that you have to pick a strategy and say, I want to try and get 10% growth on my money or 12% growth. And then you must go and find a portfolio, an investment with a portfolio in that investment that is going to try and get you that. You must pick that. That's your strategy. That's what you buy into. And that's what you run with. And then you keep an eye on it. And if it does what you want it to do, great, you are winning. If it does not do what you want to do it, well, time to move. Okay. Mason, I hope I answered you. So Wayne and Donnie van Heerden, two of you are doing business here on my TikTok live, eh? Good join us. Zero Cool says, what do you think of the tech-heavy NASDAQ 100 index? Is it dash for a long term? Yeah, you know what, Zero Cool? I don't really want to make comments because I'm not really a specialist when it comes to shares and so on. But the one thing I can tell you, yes, at the moment, the tech-heavy NASDAQ, I think it's tech-heavy all across the world because it's your Microsofts and your NVIDIAs and everything, and especially with AI coming through and AI becoming so popular and the things that's happening with AI, I do believe that technology is going to have a run for a significant period of time. I don't know if there's anybody old enough on this call to remember back in the early 80s, 70s, 80s, when computers just came out and nobody believed in it, and then suddenly Microsoft kicked in and we just had this exponential growth in technology. And then it flattened off again, and now with AI and everything, just with the speed that everything is developing, again, tech is just going. And I think it's going to continue for a while. I cannot see with the way that things are developing that tech stocks are going to cool down in the very near future. I just keep on hoping that the portfolio managers that I trust in and that has proven themselves over the years in terms of the portfolios that they manage, I just keep on hoping and trusting that they will be on top of this stuff, which I believe they will, because these guys has teams, big teams that look after them, that specialize in different areas, which makes portfolios so great because you're not reliant on somebody that just thinks, oh, great idea, let's go and buy this and sell that. They actually got teams of specialists that gives their input in order for them to make a decision. Lots of information. So yeah, I do think it is safe for the time being. Z2 has a big smiley face. I hope you're not smiling at me. Mason says, what's the minimum to put into an RA? Let me just get there. Whoopsie, that's not what I want. What is the minimum to put into an RA? Okay, so Mason, it depends from company to company. Some companies will take, I think the last time I checked, the minimum was 350 Rand a month. But some companies won't take less than 750. So it depends on which company you're going to go with when you invest. And Zambian, I think you misunderstood the question unless I misunderstood the question. I read Mason's questions, what's the minimum to put into an RA? 350 Rand a month. The max of 350,000 that you are talking about, your Zambian chef, that's the maximum that one can put into a retirement annuity to get the tax deductibility of your premiums off. So if you invest into retirement annuities, you can deduct your premiums from tax on a yearly basis. And the maximum that SARS allows is 27.5% or 350,000 Rand. If you can afford that. So 350,000 Rand will be for the person that earns 2 million Rand per year, that can invest 540,000 Rand into an RA, and SARS just says, sorry, we limit you to 350,000 Rand. I said minimum. Okay, Mason, we got you. Small misunderstanding there between you and our other listener. Okay, Joey Pacello says, suppose I made an early retirement at 50 years and got my 1/3 lump sum at 55 years. So, Joey, here's the thing. If you go into early retirement at the age of 50, it means that you put your pension fund money into a preservation fund, or you left it with the company you were, and now at the age of 55, you're going to go into pension and you're going to take 1/3 as lump sum. Nothing wrong with that. As long as you wait until the age of 55 to withdraw the funds, there's no problem. You can withdraw your 1/3. It's just that at the age of 50, you won't be allowed, well, you will be allowed to draw 1/3, but you will pay a lot of tax because you will pay tax on the full 1/3. While if you wait until 55, 550,000 Rand of your 1/3 will be tax free. Okay, John Wick says, would you invest your personal money into the 4 AM Club? So John Wick, John Wild's cat sitter. Interesting that. Would you invest your personal money into the 4 AM Club? So here's the thing, I'll just acknowledge it up front. The 4 AM Club is my son, Marcius. He's the one that started the 4 AM Club, and he loves alternative investments, and they love to go into high-risk alternative investments, which have proven to do very well. I personally am older than him by a good 20-odd years, and therefore I come out of a more conservative environment. I grew up more conservatively, and therefore I do not feel as confident on alternative investments as they do. So yes, I will invest money, but I won't invest a lot. That's the bottom line. If I had to make use of any of their funds, I will put small amounts in there because it's just me personally being a more conservative investor. So yes, I might be investing money there, but it will be small amounts because I am more comfortable with making use of more traditional investments, such as the things that I discuss here on a Thursday night, and with the returns that I have seen and personally received on those traditional investments over the years. So I hope that answers it for you, sir. Okay, Joey Pacello, we're back with, suppose I made an early retirement at 50 years and got my 1/3 lump sum. Can I take out another RA? Joey, yes, absolutely. You can take out another RA whenever you want. As a matter of fact, Joey, I've got some clients that went into retirement 55, 60, and when they went into retirement, they actually started a new retirement annuity because they saw the benefit of the tax rebates that they would get on the retirement annuities. There is nothing that stops you from starting a retirement annuity anytime you wish. There is no age limit on retirement annuities. You can start it whenever you want. It's only when you want to cash in, take your 1/3, 2/3 option, you are limited to the age of 55 or later before you can do it. But yeah, absolutely. No reason why you can't take another RA. Absolutely no reason. Good evening, Hilton. See, you greeted me. Dory, I'm glad. Thank you very much. She says, I'm happy to see that. Well, I hope that I've answered your question, Dory. And there's somebody that got a gifter badge, which I still don't have any idea of what it is. Big Fun Sal, sorry, I'm not going to invite you, sir. I don't know who you are. What do you think of the bank's tax-free savings account when they invest? Oops. What do you think of the bank's tax-free savings account when they invest? Is there growth ETFs, example FNB growth ETF tax-free savings account? So what you have to understand with regards to the banks, normally when we talk about banks tax-free savings accounts, it's because a bank is bank. People open a check account or a savings account or money market account with them, okay? So the majority of people that goes and opens a tax-free account with the bank is normally a tax-free savings account. But banks do have the option of making use of share accounts and ETFs, like you say, etc., etc. What I think about the banks investing in ETFs, I don't see anything wrong with it, because a lot of the portfolio managers that we deal with in the portfolios that we use, they also make use of ETFs. It's part of their diversification of their funds, and they get good returns on it. I don't exactly understand how banks do it and how they operate, and therefore I will not comment to say it's good or bad. But I can only assume that if the bank is not giving you a tax-free savings account, but a tax-free investment, and they make use of an ETF, then they are going to be working pretty much similar to what the investment companies is doing by charging you a fee on that. And if they get 12%, then you get 11% after they've deducted their fee. So then there's nothing wrong with that. It's the savings accounts that I have a problem with, because the bank is going to give you a 5% interest there, while they take your money and they go and invest it in the stock exchange, whatever, and they can make 12, 15% on it, and you walk away with 5% because that's what you agreed to. That's where I have a problem with the bank. Somebody else got a gifter badge, which I don't understand. Joey Bocello, oops, I almost missed you, hang on. There we go. Joey Bocello, what would be your advice to a young professional wanting to purchase a car? Used car versus new car? Always the used car, mate. That's my opinion. Always the used car. Have you seen how quickly vehicles lose their value? If you go and buy a new car, second-hand cars also to a certain extent, but a new car specifically, the moment you drive it out of the showroom, I think you lose something like 25 or 30% of the value. It just doesn't make sense. New vehicles, oh man, I don't even care if you are a young person. I don't care if you're young, middle-aged, old, whatever the case might be. To me, it doesn't make sense to buy a new car. I personally have bought 2 new cars in my life, and both times I've been, what the hell, why did you do it? Just for that wonderful new car smell. You can get great second-hand cars, demo models, etc., at substantially reduced prices, and that car is not going to lose its value as quickly. And then let's just mention this with regards to cars. Cars and houses. If you want to buy a car or a house, buy something that you need. Don't go and buy something that you want your next door neighbor to see and go, wow, look at that. If you can afford and if you need a small Mazda 323, then go and buy the Mazda 323. Don't go and put yourself out and buy a BMW X1. If you can get along at this stage in your life with a 1-bedroom townhouse, then go and live in the 1-bedroom townhouse and buy the 1-bedroom townhouse, and buy, instead of buying the 4-bedroom house just to impress your friends and your family. Okay, so that's my opinion, and I don't want to get into a rant here with regards to that, but that's just my opinion. Too too many people want to impress their next door neighbors or their friends or their families. So they overextend themselves substantially when it comes to vehicles, properties, etc., just to feel good about themselves. What they don't realize is you feel good about yourself for a week or a month. After that, you sit with the debt for the next 5 or 20 years. It's just not worth it. Just not worth it. Kulu says S&P 500 versus the total world. Your take. Kulu, I'm not going to be able to tell you because once again, I look into portfolios for investments. I look into portfolios and I let the portfolio managers manage that. And it is the portfolio manager that I deal with. It's his responsibility to look at all of those things. S&P 500 versus total world. You cannot understand how complicated it gets. Because we are talking about things like emerging markets, established markets, first world markets, third world markets. There is so many different things. You can't look at the S&P 500 in the same way that you look at the JSE or the Brazilian Stock Exchange or any of those. You can't look at Switzerland the same as what you are going to look at India or China. So it's just that stuff that you talk about here. I don't concern myself with it. I don't really care what happens in China tomorrow. I don't care what's happening in India. I'm not talking about on a human rights scale. I care about the people that is going through wars in the Ukraine and Israel and stuff like that. But I don't care about what happens in the economy over there. Because the person that needs to know what's happening in the economy in order to know where to invest the money is a portfolio manager that I trust from a company that I trust. So I'm not trying to give you a lecture here. I'm just trying to get you to understand that the question that you're asking is not something I can answer because it's not something that I specialize in. Okay. Webster says, Hi Corey, hello Webster. I think you've been here a few times. Hi Corey, ek sien veral op TikTok dat forex trading raak al meer prominent raak. Is dit iets waarmee jy deel? Nee, ek experimenteer nie daarmee die Webster. No Webster, I do not experiment with forex trading, and as a matter of fact, about 2 years ago, I met a number of people that's into forex trading, and I don't know if you remember, well, don't know if you've seen it, but a lot of them were involved in these forex bots, and you buy a bot, and yes, and to me it was there was a few of them, and then everybody started buying bots, and suddenly there was 110 people selling bots. And suddenly there was like 110 people selling bots and doing bots or whatever the case might be. And I almost want to say the market got flooded, and then suddenly the bots didn't work anymore. So the bots worked for a short period of time, and then it didn't work anymore. Now, forex trading is not exactly the same, also called hedge funding. Not hedge funding, derivatives, sorry. So forex trading is a completely different story. If you look at forex trading from an investment point of view, lots of companies use it. They use it in their portfolios and so on and so on. So, but you get a lot of people doing forex trading once again, or promoting it on TikTok, and once again it is with bots or with trading, what do they call it? Training courses that they put out and so on. So those people I'm scared of. I'm scared of the person that's doing the trading via bot. I'm scared of the person that's doing trading by giving you a program that's going to help you with that. I'm scared of that. That's where I do get scared of forex trading. But if I look at the companies and the portfolio managers that do forex trading, different story. Because once again, it is a company that is investing a lot of money into expertise, has a big team of people that all work together. So they've got lots of information that they can utilize before and when they do the Forex trading. So I don't know if that's explained the question to you, Webster, but personally, maybe I should have just said this. Personally, I do not experiment with Forex trading. Oh, excuse me, folks. Let me go back here. Okay, let's see. This is T-Man says, I have a Sanlam RA via monthly debit order. Can I open a second RA with Old Mutual with a yearly lump sum only? Yes, you can. Absolutely. T-Man, as a matter of fact, it might be a very good idea for you to invest or to open a new retirement annuity with Old Mutual, not with Sanlam again. And the reason why I'm saying so is if you have a number of retirement annuities with one specific company, let's say you have 5 different retirement annuities with Sanlam. If you decide anytime after the age of 55 that you're now going to retire from that retirement annuity, you've got 5 but you want to retire from one, legislation says, sorry, you can't retire from one, you have to retire from all 5. We're going to put all 5 of these together, and you're going to have to choose how you want your income and your lump sum. So if you now have one with Sanlam and you've got one with Old Mutual, then at least you are in a position that you can choose to retire from the Sanlam one at the age of 55, for argument's sake, and a year later, 2 years later, then you can retire from the one with Old Mutual. So it gives you flexibility. It helps you with regards to your planning in terms of future income planning. So I think it is a very good idea if you do choose to make use of a second company, so to speak. Let's see. John Wild Skitter again. Do advise, due to me being in my 20s, to go for the high risk alternate investments like your son's company. Mate, this is the thing. If you're young and if you have the gajuras to do it, then you go for it. Just go and find out if it's the type of investment that you feel comfortable with and manage it. Check it. That's what I always advise people. If any investment that you do, make sure that you personally take a personal interest in it and check it. I mean, there's nothing that stops you to contact the company literally on a weekly basis and say, tell me what the value is, or to get access to your investment so you can see for yourself. So as long as you do that, absolutely no problem, because then if the investment does not perform or there's a crash or whatever, you at least are informed, you know about it, you can make moves that you want. Just take note that the majority of these alternative investments do not accept or don't normally accept monthly investments. So if you're in your 20s, I can only assume that you want to start doing a monthly investment. So you might have to first save up money in a bank or in another investment in order to then go and withdraw it and invest it with the alternative investment. And my personal opinion is, and like I said, I'm the more conservative type because I'm older. I would, if it was me, and if I go back to my own self when I was 20, I would most probably want to invest with the alternative investment company. But knowing that I do not wish to risk all in one go, I would also most probably only say, okay, well, I'll take 10, 20, 30, maybe 50% of my capital invested there, but I won't take everything. I do want to have some protection. Some people don't mind taking risk, and that is my son. He doesn't mind taking risk, and that's why he's been so successful. You have to take risk to be successful. I'm much more conservative. It's taken me longer to build my business. It's as easy as that. I think I've just answered the second question as well with regards to, or rather, a more traditional company. what you must realize, okay, and this is something that every person that's an investor must realize is, you as an individual must make peace here and here with regards to what you're going to do. Some people can think here that I'm willing to take maximum risk, but when it hurts here, and vice versa. So you have to remember that when it comes to investments, as much as people don't pay attention to it, investments is something that is not just rand and cents. It's something that's emotional. So you must be emotionally prepared for whatever type of investment you make. You must be emotionally prepared if you're willing to go high risk, to lose money and then to make peace with it. You must be emotionally prepared that if you want to go into something more conservative and it grows slower, to accept that somebody else might get to their goal within 5 years and I'm going to get to my goal in 10 years. So it is a very important part of investment which a lot of people don't take into consideration. If you take that into consideration, I think you're on the right path. AP says, that's a Shackmos. Okay, whatever. I don't know what you're referring to, AP, but that's okay. I wanted to become a broker like you. I hold an LLB with licenses and daily habits would I need. So, Joey, if you want to become a broker or financial advisor, I'm happy to spend some time on a call with you and tell you what you need. So yes, the LLB that you've got qualifies you already. You're going to need to do your RE exam. That's the next thing that you're going to do. And the third thing, and I think the most important thing that you have to have, is a passion for people and the wish to help people, the wish to be of service to people. That is what makes a successful financial advisor. Too many financial advisors comes into our industry and all they see is the money and they think, I'm going to make money left, right and center. You can make lots of money. There's no two ways about it. But if you have a passion for people and you really want to help people, then it will be a good industry for you. It's difficult. Make absolutely no mistake. Our industry is not an easy industry for financial advisors. It's difficult. It takes time to build yourself up, but it is a very, very rewarding industry. So by all means, contact me. I'll have a chat with you. I'll tell you more about what we do, how we do it, and how it can be of value to you. Where was Michael says, is Bloomberg a good source of financial news that has an impact on international markets? Michael, my good man, Bloomberg, I don't listen to Bloomberg very often. I don't watch Bloomberg very often. I do think that when people see me giving some financial advice, they reckon I'm on top of everything. But man, there's so much. So Bloomberg, from what I've seen of Bloomberg, I think they're good because they do good reporting. Whether they have an impact on international markets, I don't know. Because I think Bloomberg and the news that they spread is pretty much the same as other companies. And a lot of news, I won't say it's fake news, but the news that's presented is that what we know is going to have an impact and it's going to sensationalize everything. It's not necessarily the news that is accurate, okay? So my opinion would be on somebody like Bloomberg, I reckon they're good. I reckon that, they would not have been in existence for as long as they are if they weren't good. But if they have an impact on markets, I kind of doubt it. Because they're more of a news agency than anything else. I might be completely wrong. Like I say, I don't watch them enough. I see them here, there, and everywhere, but that's about it. Joey says, if gambling is my only income, how should I structure it to stay tax compliant? Joey, very easy. You go speak to a tax practitioner. Because I don't know. I don't do taxes, mate. I understand taxes on investments, but not on what you're asking. So find yourself a good tax practitioner. If you need somebody, I know somebody. Michael says, your risk profile determines your investment portfolio. Absolutely, Michael. I agree with you 100%. Although I must be honest with you, Michael, very often when I do a risk profile for somebody, I have to seriously advise them that they are in the wrong profile. A lot of times I deal with people and they are completely conservative and they can't be because of what they need to grow, how much time they've got, etc. And then other times I get people that are super aggressive and I have to just cool them down. So sometimes people are not good to themselves. But yes, a good risk profile can tell somebody what and where to invest. Investment should be done without emotions. Absolutely 100% agreed. It's very difficult, but it is. Antsman, what is your golf handicap? All I can tell you, Antsman, is my handicap is better than yours these days. Look at that. Lion King. We almost finished, folks. It's almost 7 o'clock and I cannot wait to grab some grub and a bed. Hi, so I've got $1 million pension and I want to retire. Can I still take 550,000 tax free? No, Lion King, you can't. If you've got $1 million rand in pension and you want to retire, the maximum you can take is 333,333 rand because you can only take 1/3. But yes, if you have not taken any previous pension funds, then that 333 will be tax free. Michael says, yes, that's indeed the RE5 exam that I spoke about, but thank you for pointing out, Michael, that it's the regulatory exam 5. Leslie says, sir, what's your opinion on all this forex trading we see nowadays? Oh, Leslie, I just gave a long explanation about that earlier on. It's not really new. It's pretty much been there all along. But my opinion is that the TikTok riders that does it with bots and in their personal capacity and whatever, I do not trust them and I will not be investing my money with them. I think it is a high risk investment field. So I'd rather go with portfolios and investment companies because they've got big teams that looks after their investments, that does all their research on forex trading and does investment on a very informed basis. I do feel that a lot of these people that advertise their skills in forex trading on the internet or on TikTok and social media, they work on a few basic principles they've learned. They believe that that's the be all and end all. They will never lose, and they're gonna suffer. So that's my quick opinion on it. It's not something new. It's something that's been here for a long time. But I will not be trusting somebody that, or I won't be investing. Let's put it that way. I won't be investing myself with somebody that's doing it on TikTok. I would rather be making use of a company that I trust. Okay. Eastland says, good evening. When I retire, can I convert my Provident Fund to an RA and take the interest monthly? So, Eastland, when you retire, you will not transfer your Provident Fund to an RA because Provident Funds and RAs is where you invest money until retirement. When you get to retirement, you'll take your Provident Fund and you convert that to a life annuity or a living annuity. And yes, if it is in the form of a living annuity, you will be living off the growth, not necessarily interest. If you put everything into a living annuity and into a money market account in that living annuity, then you'll be living off the interest, which is not a good idea. I would not advise that. I would advise you to invest in a portfolio where you'll be earning growth and then you'll be living off that. But that's how it works. Provident Fund to living or life annuity, living of growth, not of interest. I hope it's given you that little bit of clarity. Folks, we are basically at 7 o'clock, so I'm going to run through the last few very quickly. Come on. Wow, now everybody wants to ask 110 questions. What level of annual return is considered attractive or reasonable for investors in a hedge fund? Mate, Inamandla, there is no set annual return that's considered attractive or not attractive. It doesn't matter whether it's a hedge fund or portfolio, whatever. It depends on the investor, okay, as to what they want as a return. Do you want inflation plus 2%, plus 4%, plus 6%, plus 9%? If you as an investor choose a fund or a hedge fund that gives you that return that you are pursuing, then it's attractive and then you're in the right fund. It differs. These things are not set in stone with regards to returns. Ryan, if you invest 150k in a startup, how long should you give yourself to make it back? Oh man, that is so difficult to answer, Ryan, because we're talking about business here. I don't want to give you an answer, but I reckon if you invested in a startup and your startup is successful, you can make it back within 12 months. If you do it a bit slower, you're looking at most probably 2 to 3 years. And yeah, it can take as long as 5 years, but I think if it starts taking longer than that, then you have to ask yourself, listen, am I working or am I running a business? Agnes says, I have a retirement annuity. I'm 55, member of GPF. I have 60k worth of retirement to the company. Hey, is it? And then we lost you for a second. Agnes, I hope to see you now. Yeah, good investment because I won't get more than 250k at 60 years. Yes, Agnes, your investment is a great idea. I know that it's not worth what you want it to be worth, and it might not be worth what you expect it to be, but it is a great idea because it is money that you wouldn't have had. It's capital that you've invested that you would not have had. That capital is something that you can do something with, whether it's going to supplement your income, whether it's going to pay off a car, buy a new car, whatever. Whether you're going to use it to go on a holiday, it's money that you didn't have. So yes, Agnes, any investment the person has, whether it is 10,000 Rand or 100 million, is good because it's money that you would not have had if you did not invest. Michael said, risk profile doesn't always meet your financial goals. Just mention it on client's record of the... I hear you, Michael. Michael, maybe you should talk to me. I need some more advisors. In today's life, how much do you need in order to retire, to have a normal life, not a big one? Impossible to say, because the person that needs 5,000 Rand per month can get along with 2 million Rand in an investment. The person that needs 50,000 Rand a month is going to need 20 million Rand. So it depends on what you need. There is no set amount. We all need something different depending on what we want out of life. What level of annual return? Quick. What level of annual return is considered an attractive or reasonable for investors in the hedge fund? We've answered that one. A proper information to assist you with retirement needs and goals. Correct. Okay, please make a video of living of interest and living of growth, please. I have done so. Just go and check. I've got plenty of videos like that. Okay, folks. I am going to call it a night here. I see that Michael is giving us a lot of advice here. And thank you very much, Michael. Like I say, I would love to chat to you in person. To the rest of you, it is almost 7:10. I normally call it quits at 7 o'clock. So please do send me the questions that I did not get to answer on the following WhatsApp number: 060-541-4685, 060-541-4685. I promise you, I will answer the questions that I get there. If I have not answered your question tonight, please contact me next week or tune in next week and be first so that I can answer you, okay? For the rest of you, have a wonderful, wonderful evening, a wonderful week.